Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 23rd of January 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here is Nikkei225. So our Japanese index here, after a continuous climb higher here, finally having a bit of a retracement here to the downside. Nevertheless, it managed to close today's candle here already in the positive territory, but still below the previous days, so the highs of the previous days. So of course, for now we're going to remain very cautious. Still, we are targeting this downside resistance line taken from the highs of the 2nd of October last year. So in a way, we could see another push higher here, but one of course should be cautious here. If this suddenly decides to drop below the 20,345 level, approximately there, or even better, to be honest, let me just quickly put that level here on our chart, below this little area here of potential support near the 20,215. So this way, of course, the index would also be placed below the 20 SMA here that we've got inside this Bollinger Band, so also would be a bearish indication. So in a way, then we could target the much lower levels, like of course the psychological 20,000 level, but slightly below that we do have the 19,925 marked here by the low of the 7th of January. So again, of course, if that fails to withstand to the bear pressure, then yep, further declines are possible. But for now, until we're above the 20 SMA here, and we're still above this key area of support near the 20,215 level, we are still going to continue aiming for higher levels, especially if this decides to push higher above the 20,970 zone, approximately there, guys. So certainly we could then target this downside resistance line, and this is where the big action could start, because this is where the big battle between the bulls and the bears could take place. Because if the bears continue, if the bears kind of take control, we could see a beautiful rejection here near this downside line and another push lower. But if the bulls will remain in the driver's seat, then a further push higher here above this downside resistance line, and of course a move above the 21,340 level, then yep, we could start targeting the 200 EMA, or even actually slightly above, just slightly a few points above that is the nice potential area of resistance here near the 21,875 level, which was marked here by the highs of the 13th of December and also by the highs of the 16th of November last year. So, but then again, guys, for that scenario, for those levels, we would need to see a nice good pop here above this area right here. Let me just put an arrow here for our future reference, and that level is the 21,340 level, approximately there, guys. And like I said, still keep your eyes on this downside resistance line. Let's see how that plays out. If the index wants to continue pushing higher, let's see how that plays out near this line. Jumping into another index, which is the dollar index, and that's DXY. So looking at the DXY now, I was covering this one a few videos ago, and basically I was telling you guys to keep a close eye on this downside resistance line here, and on this upside support line as well. So to be honest, for this one, you can see that for the past 2 days it was kind of trading nowhere, let's put it that way, comparing it to, let's say, to Friday's trading activity, which led to a break of this downside resistance line. So now the index is kind of trading above it. The only thing is here we're still quite neutral on this one, because you can see that and actually let me just jump into a 4-hour chart on this one, guys. So basically what's happening here is that yes, we did have a nice push above this downside resistance line, so it's currently trading above it still, but at the same time it's now traveling below this upside support line. So in a way, for now, until we get a clear breakthrough one of our key support and resistance levels, we're just going to remain neutral and continue observing the price action here. So in a way, on the upside here, what we're keeping a close eye on here is the 96.40 level, approximately there. So a nice good push above this could of course push this index a little further up here. For those who are more on the cautious side, you could in a way wait until this gets above the 96.50. It's only about 10 points away from where from the level that I've just mentioned. But for those, yep, like I said, who are more on the cautious side, you could in a way wait for the 96.50 level and then aim for much higher levels. But on the downside, well, if this suddenly drops below the this downside resistance line that I was talking about, and of course breaks below the 96 barrier, now this is where the fun for the bears could start, and we could see them, or should I say more of them, jumping in here and potentially driving this one further down, initially towards the 95.75, and then towards the if that doesn't hold, of course, and then towards the 95.45 approximately there, which was marked here by the low of the 15th of January. So long story short, guys, on the upside, the 96.50, keep an eye on that one. For those who are more on the cautious side, you could also, like I said, keep an eye on the 96.40, just 10 pips, 10 points lower. And on the downside is the 96 level, so keep your eyes on that one. A break below that could potentially open the path towards lower levels. Jumping into Ethereum. Now, looking at this crypto, I was talking about this one also in one of my previous videos, and basically I was telling you guys to keep a close eye on this 118 level. Now, this is what's happening right now. So we had managed to get a nice push away from the 112.50 level. Also mentioned in one of my videos, we did have a false breakout here, and you can see that the 4-hour candle quickly closed well above this line, well above the 112.50, and then the next 4-hour candle kind of opened nicely here, a little bit lower, but of course but then managed to push strongly to the upside, and now we are sitting here near the 118 level. Of course, this is still seen as a bit of a positive sign here, at least for the short run. It's difficult to talk about the long term, guys, on this one, but from the very short term perspective, and given the fact that it's also trading now above the pivot, we could see further acceleration here to the upside, and the next potential level that we're targeting here is the 125.50 approximately there, which is also not far from the 200 EMA, so also keep an eye on it. And that's of course on the 4-hour chart. So the 200 EMA is just slightly above the 125.50 level, so could be a nice testing area as well. But then again, like I said, for now, be very careful, be very cautious on this one. This is what it's forming right now. It's kind of trading nowhere right now. It's waiting for the next big move probably. For us, let's say, to turn bearish on this one, well, it's still the same level here, the 112.50. A drop below this could open the path towards the 105. Or even lower, and the 105 level here was marked by the low of the 21st of December last year. So keep your eyes on this one. Very interesting developments here, but again, be very careful, because this could in a way trade anywhere, to be honest, because this is the crypto world that we're talking about. Jumping into GBPUSD now, this is a very tricky one and at the same time interesting one. So looking at the daily, yesterday we had a nice run here to the upside, so now it's it seems that it's aiming for the last week's highs that we saw here near the 130, the psychological 130 level. So it's not far from it. It's only about 40 pips away from where it's trading right now, from the psychological 130 level. Looking at this daily chart, certainly there is some potential for this one to travel further up, but if this fails to reach the 1.30 level, the psychological 1.30, now, well, I mean, we could see maybe a bit of a slide here, maybe a bit of a correction, a small one, of course. And jumping into a 4-hour chart on this one, this is how you could, in a way, position yourselves or prepare yourselves just to kind of, you know, mark some key levels. And this is what we're going to do right now. So in a way, of course, we could keep a lookout on for this little upside support line here, connecting these two spikes low here. It's a bit of a tentative one, so don't kind of hold up to it too much. Just something for you guys to keep in mind. So this is something, like I said, to watch out for in case this reverses back down. And in terms of the downside here, if this suddenly drops below the pivot here and starts moving below the 129.15 level, now this is where we could see maybe further declines to the downside. And again, this is where we will initially aim for the for this upside, this tentative upside support line initially, and then we'll take it from there and see what he wants to do with it. Maybe he wants to rebound and push back up here, or that actually wants to break and drop further down. But then again, the downside could be limited as well. We do have some tentative upside support lines as well, so yep. But we'll take it from there later on if we see that break here below the this upside support line, and because if it decides to travel below the 129.15 level, so that's quite important, guys. On the upside here, of course, this is what it's forming right now. It seems to be more of a bullish pattern here, at least for the short run. So, but for those who are more on the cautious side, you could in a way wait until we get above the 129.75 area, something like that, approximately there, marked by the yesterday's highs. And then you could target these highs that we saw here back in last week near that psychological 130 level. This is where it will be becoming very interesting, because if the psychological 130 level gets broken, the next potential target here is the 130.30, and it's, to be honest, it's better visible here on the daily chart. So the 130.30 kind of is marked here near the highs of the 15th of November, and also is not far from this 200 EMA shown as the black line. So keep your eyes on that one. Be very careful, stay safe, and always have your stop loss in place, guys. Last pair I wanted to quickly touch on, and that's USDCHF. Now, talk about a nice good rally here. It seems that it doesn't want to even stop even for a little retracement back down. So for now, of course, we are still aiming for higher levels. The next area that we're keeping a close eye on is of course the psychological 1 level, so, or even just slightly maybe above that, the 1.0005 level here, so not far from the highs that we saw here back in the end of November. But of course the main one is to watch is of course the psychological 1 level. So keep your eyes on that one. We're not far from it. We're just about maybe 35 pips away from reaching that area for the psychological 1 level. But again, let's not forget that we could maybe see some surprises, and maybe this would decide to retrace back down first and then maybe move higher later on towards that level. So looking at the 4-hour chart on this one, you can see that it's currently stuck here. It's kind of ranging now, or even actually coiling up here, so it depends how you draw this. And that's why for now we're just gonna continue observing this. On the downside, if this suddenly drops below the 0.9960 level, this is where it becomes interesting for the bears, at least in the short run, because it would also place the pair below the 21 EMA here shown as the yellow line, and we'll target the S2, which is around the 0.9950, just about 10 pips away from it. But to be honest, a much better area of potential support could be seen here near the 0.9920 zone, which was marked here by the highs of the 2nd of January. And this is where it could become interesting to watch what it wants to do. Does it want to rebound and push back up, or does it actually want to travel further down? So in a way, for those who likes lines, and you could also keep a close eye on this one. So this could be your confirmation here for this possible slide lower. So in a way, if we get a break here below this, then certainly, like I said, still wait for a drop below this 0.9960 level and then target much lower levels. But for if it even, let's say, if it drops here below the upside support line but fails to drop below the 0.9960, then, well, I mean, probably the downside could be slightly off the table, and we could maybe see a nice rebound and a push higher towards that psychological one level. For now guys, stay sharp, be very careful on this one. It is interesting, but to be honest, don't forget that even looking at the daily chart, it is slightly overextended to the upside, but then again, it still has some room to travel further up. And as we saw the daily chart here, let me just quickly jump back in just to it still has some room to travel a little bit higher here, but again, like I said, be very careful with this one because it's already quite overextended. Okay guys, I hope you have found it useful, and thank you very much for watching and listening. And if you want to join me later on at my traders tea time, and that's 14:15 GMT time. But for now, I hope you have a fantastic trading day, and bye for now.